To that, let's talk about burgers now. Westlife Foodworld. The stock is lower in today's trading session. In fact, it was lower yesterday post numbers as well. The revenue growth of the company has softened in a weak quarter. The operating margin also hit by royalty and wage hikes. The profitability was lower on account of higher depreciation. The same-store sales growth came in at 1% itself. Akshay Jatia, who's the Executive Director at the company, is now joining us. But before that, we also have visuals of the Prime Minister entering the India Mobile Congress. So we did see the dignitaries of the mobile world. We got pictures of Akash Ambani. We had, Mr. Kumar Mangalam Birla out there as well. And now we have some visuals coming in from the Prime Minister. So we will keep getting more details. Like Nigel pointed out, we have Ashmit out there. Even Rima's covering the telecom space at the India Mobile Congress. The Prime Minister joins in too. Telecom, big sector, Nigel. A lot of growth opportunity. Everyone keeps talking about the data connectivity. We also had Vodafone's numbers come by yesterday. So now we'll be eager to hear from what the Prime Minister says.
Well, indeed, I think let's get to that management, Mangalam. I think you had introduced Mr. Akshay Jatia, who joins us on the show right now, and we'll keep going back to IMC. Hi, Akshay. Good morning. Thanks so much for joining in. Well, how are things shaping up as of now? Do you see any kind of exhaustion in terms of consumption, or are trends still positive? We have the World Cup that's underway, so I'm sure people, consumption should be pretty strong. Are we getting that correct?
Thank you for having me. So, while I won't talk about the current quarter that's going on, but obviously we are optimistic about it being number one, a World Cup quarter as well as a festive quarter. And usually Q3 is, always good for retail. However, in Q2, obviously you have seen softening demand. And it's all round, where this is seasonal. And we have seen this year on year pre-COVID. Post-COVID, obviously, we had a couple of years of euphoria. So we aren't very concerned. You do see these seasonal ups and downs, but we are very confident about our 5-year vision that we put out in December.
All right, we get that. Akshay, I just wanted your thoughts on the World Cup itself. I do understand that you won't be able to give us specific numbers of the quarter which is currently underway, but your thoughts on how early demand trends have been, because online reports and food delivery apps are saying that burgers have been the most delivered item during this World Cup. So how much higher is the growth this time around, according to you? If a rough range, if you could, just give us a sense.
So, we're very enthused about that because we are the leaders in burgers, and both burgers and chicken as categories are growing very fast. However, Western fast food, informal eating out is contracting, in the last couple of quarters. And that again is seasonal. Inflation is kind of pinching consumers, but again, it's temporary. And like you said, in Q3 with the World Cup, food delivery apps are also, very active. We have our own digital platform. So we're quite optimistic as the World Cup is kind of moving forward. We had Navratri and again, some kind of festivals that do impact eating out a little bit in the first, week of October. But we are optimistic as the World Cup gets into its final gear. And the festive quarter has a lot of kind of initiatives that we have planned. So we're very optimistic about Q3 in terms of, kind of reviving demand. And Q4 will kind of, be played out similarly by us.
Okay, all right. Let's get to a couple of numbers then, Akshay. For the first half of the year, the SSG growth, I think, is in low single digits. And you've grown your revenues by close to 10%. For the year, what is the outlook in terms of growth? Point number one. And also in terms of margins, how do you see things shaping up? Go ahead.
So, like you rightly said, SSG is still positive. I think it's differentiated from an industry point of view and a peer set point of view. Even total sales growth is in double digits. We've always been guiding that we have a longer term vision where we look at high single digit SSG as our target. And, years may kind of be a little up and down. This year, we are striving towards the mid to high single digits. Obviously, like I said, we have to see how Q3 and Q4 play out. It is the first year where you've seen seasonality also come back into play post-COVID. However, basis our strategy for the next 5 years, we are very optimistic in terms of delivering our Vision 2027, as we call it. And if you look at this quarter also, we've delivered positive SSSG on a very high base where we comped almost 40% last year.
Right. So, that's point well taken. But This year, because of a high base and general slowdown, you presume that it would be around mid to high single digits as against the earlier long-term vision of high single digit SSSG that you have, right?
So yes, that is the plan. Right now we're in, close to mid single digits, and we are optimistic about Q3 and Q4. Like I said, it's a range. We are still in positive single digits, and high single digits is the aspiration for 4 to 5 years. So I think we will, stay within that range, and we have everything in our arsenal strategically and tactically to play out both Q3 and Q4 as well as the years to come.
And what's your word on the margins? Because the first half, your margins are lower as compared to the same time last year, the first half last year. You otherwise usually gun for 100 basis points margin improvement year on year. Is that still on the cards for this year?
Yes, definitely. I think profitability, we have a lot of levers, and we're very conscious as an organization in regards to profitability. We have added a large base of stores over the last 1 year, and we're continuing to add around 40 to 45 stores this year. So as you have seen sales grow a little slower, you will see a marginal impact on margins. It's not a very big impact. We're still between the range of 12 to 13% pre-Ind AS, which is not very different from where we have been. Yes, our longer term target is to be between 15 to 17%. So we will be striving for margin improvement in this year to come as well.
All right. Thanks a lot, Akshay, for joining in and giving us the details. We wish you good luck for the second half of this year, and also a lot of appetite building up ahead of the crucial matches that are there in the World Cup as well. With that,